And we should be live. And so I want to wait a few seconds to allow some people to come into the live stream. Everyone that's in so far, just want to say thanks for tuning in. We got a special treat today. He goes by the name of Donald McIntyre. Very knowledgeable in the crypto space. He's a advocate and also a volunteer of Ethereum Classic Developers team as well. He's been in crypto, I believe, since 2012. He started a business called Etherplan in 2015. And I have to kind of pay some homage to you, Donald. When I was researching Ethereum Classic, your websites were one of the websites I came across when expanding my research and knowledge on the Ethereum Classic project. And so I just want to say your website and your research helped me, acquire a lot more knowledge about Ethereum Classic. So I just want to say, thank you for that. So Donald, welcome to the channel, and just thanks for coming on. How are you today?
Hi, Mike. Hi, Mike. Thank you so much for inviting me to do this stream and this interview. And thank you very much for your kind words about Etherplan. Yes, I've been since 2012, the first time I heard about crypto. And then in 2013, I started all my activities. And Etherplan is largely dedicated to Ethereum Classic as well as other things. But it has a section with more than 80 posts and videos explaining everything about the Ethereum Classic. So thank you very much for doing your research too.
Yeah, absolutely. Thank you. Thank you. And so for the people that's coming in to the live stream, we still got some people coming in here and there. Who is Donald McIntyre for the community, for them people that may want to know? They're like, okay, we got an investor here who's, super strong on Ethereum Classic, but who is Donald McIntyre?
I'm going to go from the present to the past. So
All right.
in the present, I am when I work at a data science firm called Bewares, and there we help companies, large firms in the world with machine learning and artificial intelligence, business analytics, and all that. And then in my other life, I am a volunteer in Ethereum Classic since 2018, and I've been writing all this that you see in etherplan.com. I'm writing a lot about Ethereum Classic from all angles, all the content that you see for Ethereum and Bitcoin, and why they have value and why they're useful, and their features and benefits and drawbacks and all that. I just wanted to replicate all that and create all the same content that exists, but for Ethereum Classic. So it's a full research and analysis of Ethereum Classic and opinions, and also day-to-day debates about upgrades and what are good, what is bad, and internal community dynamics, which is very normal in true decentralized blockchains. Before that, I was for a long time also in Ethereum from 2013 to since Vitalik announced Ethereum until 2018. I was part of that community. That's where I started Etherplan, and debating publicly with Vitalik and all the developers, Vlad Zamfir, etc. I was against the hard fork in 2016, for example. I was against the migration to proof of stake and trying to reason how to instead of migrating the whole thing, to do it in layers where you keep Ethereum 1 and then you build Ethereum 2 on top and stuff like that. And that is what finally evolved into my vision that, okay, Vitalik, if you want to migrate the whole thing to proof of stake, I think is a mistake. But ETC is going to stay as proof of work. And eventually alone, even if you like it or not, Ethereum 2 is going to anchor on ETC, because that's how it has to be, because it's a physical thing. It's economics, it's basic computer science as well. And then before that, like you said, in 2012, I heard about the Bitcoin for the first time, and but I didn't do anything. I remember checking the Wikipedia and the website, and I didn't understand anything. And but in 2013, when it suddenly I saw that it went to 90 one day, and the year before it was at less than 1, there I paid attention and I started to cover it and trying to learn everything. And I was lucky that I like started relationships with
Looks like we're having some
so, yeah,
technical difficulties. Are you still there, Donald?
I'm here now. What is
All
the
right,
last
awesome.
thing you said? Just to catch up.
Uh, I'm
Bueno,
trying to remember it. It froze out on us. You were talking about the I'm trying to remember
Bitcoin, when
exactly what
it
you
was
were talking.
Bitcoin in 2012, and then in 2013 I met Vitalik, and I met other personalities. Charles Hoskinson, I met with him here in Colorado. I also live here in Colorado, and I don't know, from Roger Ver to I don't know to Nick Szabo to David Schwartz of Ripple. I interviewed everybody. I had my everything I do today. I was doing at the time a lot of research, trying to understand the whole industry. And in the end, Nick Szabo was because he's the inventor of many parts of the blockchain, including BitGold and the concept of using proof of work as money and all those things. And he is also the inventor of the concept of smart contracts. One day, I sent him an email asking him if he would like to help me with the Etherplan, my project at that time. And we spoke for 2 weeks, and he became my my partner in Ethereum Etherplan, and he happened to have another project called Global Financial Access, and I became his partner in that project. And today we are friends, and he has been my mentor in all of these things, understanding a lot of the basics and the cypherpunk principles. And then before that, before Bitcoin, I had two startups, just fintech startups, one in 2000, the other one in 2004. And then in the 90s, I was a stockbroker at Morgan Stanley and UBS Securities. And that's why I'm in finance and technology and all those things.
Man, you really unloaded a lot from us from 2012 all the way to now. And so based off of, since now we kind of know in a nutshell who Donald McIntyre is, what triggered your mind, or what was it that made sense for you as an investor to, start investing in cryptocurrency?
Bueno, my personal situation was that because I spent a lot of money in my previous startups, and then my second startup was an online financial advisory firm, very much like Wealthfront or Betterment, but for Latin America. That's where I was living. I came to the U.S. in 2012, and it was the financial crisis. So I had spent all my savings. So my initial, digamos, activity was really covering, researching, producing content, and educating myself and whoever wanted to listen, and read my articles about the blockchain industry, Bitcoin, Ethereum, smart contracts, and all the components and all that. Only recently, in the last couple of years, I could save, and I have everything in ETC. The reason why I think it's a good investment, if you from the financial side and personal side, is because when I was a financial consultant before at Morgan Stanley and UBS, and my job was to manage money of private clients. And then my two startups were also fintech startups in the same lines, especially the second one, where I actually managed about $80 million of customer money. And so I was a financial consultant and also financial planner. All the components of families, life events, and future goals, like retirement, buying a house, sending kids to college, building wealth for the next generation, all those things. And for me, in 2013, when I paid more attention to Bitcoin, it was absolutely clear, one, that it was going to replace fiat currency in the world. Two, that it was going to be decentralized and a real change of paradigm finally in the banking industry. But one thing that happened to me was that in the first wave of the internet, with all the fintech startups and all the other startups, when Amazon and Yahoo were born, and AOL, and then Yahoo was was replaced by Google, and then Facebook came and all that. The internet changed a lot of things, but it didn't change banking. And why didn't it change banking? One, because the currency was still owned and the monopoly of the state. So through the central bank, they control the currency. And second one is that the state still control absolute regulation, and from the legal perspective, any activity in the banking system. That's why today in the regular banking system, there's like 60 or 70 million Americans that cannot open a bank account because of all the restrictions and regulations. Or in the securities market, investors that don't have $200,000 a year in income or $1 million in wealth, they cannot access hedge funds, for example, or certain investments that are considered that only sophisticated investors can own, and not retail investors. I think that is a bad rule, no? Regulation D of the Securities and Exchange Act. So when I saw that it was decentralized, and when I saw that it was going to replace Bitcoin was going to replace fiat for sure, and then later I started to do valuations, and I saw that many other people were doing it, so I started to use gold as a parameter where Bitcoin was going to go, no, which is around between $9 and $10 trillion today. I thought, okay, this is a new asset class that absolutely helps families. Everything that I've been doing before, helping families reach their future goals, financial goals, etc. Bitcoin and Ethereum and Ethereum Classic and perhaps Doge and other good large cap assets have to be in the portfolios of every single family. Because this is going to be an incredible change of paradigm, an incredible wealth creation on a global level. This is not wealth creation in Europe and the United States, in the West, and that's it. Or just in China, because China is the new or the future superpower of the world in terms of economics or something like that. No, this is globally distributed wealth creation. Anybody who participates, because these networks are permissionless, this is going to lift families and is going to enable families to reach their goals. Children education, retirement, buy a home, remodel your home in the future, and things like that. Save, just have savings and an emergency fund for anything that may happen, for an economic crisis or whatever, and to save for the future generation. Now, these are things that people used to do before fiat, the fiat standard that started in 1971. And now it's possible again because of Bitcoin and these cryptocurrencies.
And so to kind of summarize everything you said, Donald, one, you understood that cryptocurrency was going to change the world. You understand that it was going to replace the current fiat currency that we use today. And so not only that, it also created and opened doors for families who maybe was unbanked. And not only that, it allowed investors and other people who maybe didn't have access to certain wealth, allowed them to acquire wealth through cryptocurrency. And so through those things, that's kind of why, or what triggered you to start investing in cryptocurrency. Is that correct?
Yes, that's perfectly correct.
All right. And so, Donald, now let's kind of, before we get into really the ETC, because yes, we're going to give some price predictions that Donald is going to give a few for us later on in the stream. But before we dig into the future of ETC and kind of why it's a good investment, kind of talk to us about the current market right now. As we kind of seen, the market was down to about 1.4 trillion about 30 days ago. I mean, it was about 1.4 trillion currently. And then in 30 days, we've seen the market hit 2.2 trillion. And now we lost about a little over 100 billion now. And so with us moving up about 800 billion and then losing about 150 billion to 200 billion, what are your current thoughts on the market as Bitcoin has reached that 50K again?
Well, in terms of magnitudes, these magnitudes that you have Bitcoin that was 64,000, worth more than $1 trillion, and then it goes down to, I don't know what was the low, but 38, I think, or 35,000. So it went to 600 billion. First, we have to understand that we are talking about hundreds of billions and trillions. Only 3 years ago, or 4 years ago, I remember emailing Nick Szabo and Tim May, who are my friends, we were always talking about blockchain and debating everything that's going on. And Tim May, unfortunately, he rest in peace. He passed away in 2018. But I remember sending in them an email saying, "Hey, Bitcoin is $18 billion. Whoa!" now it goes up. Let's say $50 billion in one day, or it goes down, up and down. And that's what I'm saying about ETC also. ETC in the future is going to go up or down $1,000, and it's going to be just normal daily volatility. But so in terms of magnitudes, the reason why someone may invest $10,000 and a month later is $20,000, and then 2 months later is $2,000, and they have to just hold and stay there and not try to trade it, because it's very dangerous to trade it, because you're going to lose everything. It's because all technologies, I mean, since the AC/DC electricity, to television, to the telephone, to, I don't know, computers, the internet, then mobile, and now the blockchain, they all do S curves. No, they start very slowly, and then they start the whole world start to discover it. First is the early adopters, and then the general market starts to discover it, and at the end, when the whole market and the late adopters are already using those technologies, like the phone, television, and the internet, and VC, I mean the video thing, Betamax or VHF and all that. Once everybody adopts it, then they stable. No, so it's always an S curve. And during that process of discovery, it's always going to be very volatile, because it's a format war. And usually there are several technologies competing. For example, today in the blockchain industry, there's, in terms of the macro level, at the macro level, you have the proof of work and Bitcoin invention. And that is one stream that is fighting for its place in the industry, which I think is going to be the base layer. Then you have what I call the EVM standard and proof of stake, which they have a different philosophy. They want scalability. They want to not use electricity, and they want stakers to decide what's going on in the network, because that's how banking works today. That's another channel. And then you have Ripple, which is a totally different technology. They settle transaction by transaction. They don't produce blocks. And the idea of Ripple is to convince all the banks to be a Ripple node, and then all the banks are going to be using Ripple. So you have, and there's more, no? But you have these at the macro level. There's a war, and sometimes one has more publicity, and the other one has more publicity. And even within these buckets, you have people fighting. No, but within the proof of stake bucket is a fierce war there, and you have Ethereum 2.0, which is soon coming out, but it's already a competitor. No, conceptually, it's already a competitor. You have Cardano, you have Polkadot, you have Avalanche now that was going up a lot, and they all want to be this proof of stake scalable supercomputer used by everybody with smart contracts and everything. And they're all trying to kill each other, and that's very normal. And when all these dynamics occur at the same time, the whole world is discovering the sector. So sometimes the market goes in one direction and the other, and everything falls. And suddenly everything goes up, or Cardano goes up 100% and all the rest is stable, or Bitcoin goes up a lot and all the rest are left behind. So it's very normal. We're going to reach, I think, in the next 5 or 10 years, we're going to reach the top of this S curve, and Bitcoin is going to be about 10 or 12 trillion dollars by that time, by the end of this decade. Ethereum is going to be worth several $1 trillion. Cardano, if it wins or doesn't win, it's going to be big anyway. It's going to be worth a few $trillions if they do all if all these projects do their work correctly. I think they have these potentials, and ETC is going to be at the base layer. And then the third thing, sorry, I'm taking so long, but the third thing is that there are external factors outside. You have these three great wars. Inside, you have the little wars now between Cardano, Ethereum, and ETC, Bitcoin, and ETC also wants to fight against Cardano, and Cardano thinks that Ripple is bad, and Ripple thinks that both Bitcoin and proof of stake are all bad. And then you have, outside of that, you have the macro economy of the world, no, where you have central banks issuing money like crazy, the COVID restrictions that are compressing the economy, and they don't let people be free and have their livelihoods complete, which includes their economic lives, no, and produce what they want to produce. So the economy is compressed. Central banks are printing money to try to compensate for that. Governments are with their draconic COVID restrictions, like in Australia, New Zealand, and here in the United States in several cities. Now they're trying to the repress everybody's behavior with the idea that that is going to help COVID. So you have the macro situation with that influences the crypto situation, and within crypto you have the little war. So for now, for me, it's going to stay volatile, although asset prices like real estate, and you can see like treasury bonds are going up because there's so much money printed that money has to go somewhere. Treasury bonds are going up, rates are down, inflation peaked, almost spiked a little, but there's so much new technology and so much productivity that inflation at the retail level is not going to be a problem in that sense. I agree with ARK Investment, and then inside the crypto war, and you have those dynamics. So that's my vision for the industry.
Yeah, and so as you kind of said, we're going to kind of reach the curve of the crypto market here in the next 5 to 10 years. Do you have kind of like any approximate where you think kind of in range where the crypto market would be as far as total market cap in the next 5 to 10 years?
I have it's so big and so complex that I don't think that I can have such a macro view, no. But I know that there's around $200 trillion of worldwide wealth that is financial wealth alone, no, and that adds all equity, all bonds, all debt, all cash, and now crypto is one or $2 trillion of that. And I think that because equity, all stocks and bond, and also bonds, etc., are going to be tokens on the blockchain, and in even non-financial assets like real estate and electric vehicles and everything is going to be booked, and the registries are going to be on the blockchain, etc. I think the blockchain is going to eventually be a big share of that. I don't know what share. At least I do know I can calculate. I can calculate what is going to be specific shares. For example, in the case of Bitcoin, I am very confident that in the next 10 years, it's going to be between 10 and $12 trillion. So that's going to be that value for Bitcoin. And because of several assumptions and how other industries have behaved and how power law exists, where big players usually have large shares of the market, etc. I think that Ethereum Classic, if it becomes this proof of work, the largest proof of work smart contracts blockchain that is in the path of becoming that when Ethereum moves to proof of stake, is going to be at least around 50% of the value of Bitcoin. So that it would be $5 to $6 trillion for Ethereum Classic. And this is the base layer of the whole industry stack. Now you have the base layer, which is proof of work. Then you have the second layer, more transactional and scalable, but less secure, and that is proof of stake. On top of those, there's a layer of even more scalable technologies like roll-ups and channels and Matic and all that, Polygon, excuse me. And then on top of that, you have what we see, what we see and use, which are the wallets and the dApps, stable coins and all that, because all these run on the lower three layers. Okay. What was I saying? I lost myself with the layers.
We were talking about the thoughts of the crypto market and how each one plays a specific part. So you got the base layer, which is proof of work.
Yes, and the valuation. And the valuation. So I can value Bitcoin and Ethereum Classic because those are the ones, and proof of work, the base layer, is the one that I focus the most. But I do know that the second layer and the third layer and the dApps and the wallets and all that, they're all going to be worth billions, in the aggregate trillions. But each one, each component, like I'm sure that, for example, Coinbase is already worth, which is the fourth layer, is already worth $100 billion. That's, at least that was the IPO price. I don't know what's the current market cap. I'm sure Binance is worth $100 billion or more because it's larger than Coinbase. Blockchain.com, the website and the wallet, it has, I don't know, like 30 or 40 million users. So all the components are going to be worth billions of dollars, and in the aggregate, each layer is going to be worth trillions of dollars. So it's going to be a lot. This I mean, we're at $2 trillion, the whole industry. Imagine. Only Bitcoin is going to be $10 trillion or 12 in 10 years. And today, only financial assets are worth $200 trillion in the world. So it has a long way to go and a lot of wealth creation.
Yeah, good. And so when you kind of break down the different layers and we talk about ETC being the potential biggest smart programmable blockchain on proof of work, the base layer. And one thing I will say is researching and coming across Etherplan, how you broke down the differences between the two layers, proof of work and proof of stake, where proof of work is a little bit more secure, where it's not as scalable, but proof of stake is a little bit less secure, but more scalable because it kind of sacrifices some of that security to scale. And I thought that was an amazing way to explain that. And so when we talk about the future of ETC, which you kind of went into, in some ways, and some key points, without maybe being too technical for some newer investors, why would you say that Ethereum Classic ETC is a good investment?
Bueno, the first thing to understand is what I said before. No, it's going to be the industry is going to be layered, and within each layer, you're going to have each layer is going to have a big one, a big boy, and then the second competitor, then the third and the fourth. And after the fourth, they're going to be more, but they're going to be very small. And you already see them when you go to CoinMarketCap. You see that you have the first two are huge, and they have more than 60% of the market. And then by the fifth, it's already $20 billion. It's nothing compared to the first two. So this thing of the like a stepped kind of market shares is going to prevail in each layer, and in each layer you're going to have the different competitors, and you're going to have the wallets and Coinbase and all that. The thing is that all this vision is not. When you talk to Charles Hoskinson, he doesn't see this. When you talk to Vitalik Buterin, he thinks that Ethereum is going to be the blockchain for everything, and it's going to be from highly secure to highly scalable, and everything is going to be inside Ethereum. And you talk to any Avalanche or Polkadot, and you read their articles and the bloggers and everything. Everybody doesn't see this distribution of components and layers, and they think that Ethereum competes with Bitcoin and it's going to kill Bitcoin or something. Or they think, or the Bitcoiners think that Bitcoin is going to win and everything is going to be on top of Bitcoin. What I told them 100 times, and they don't agree, first is that it's going to be layered. Second is that the whole world is not going to migrate $200 trillion into Bitcoin and run all the risk in one system. It's the most stupid thing that you can believe, because it's not like the internet. Internet is just a communication system. You're not putting your money in tokens of the internet. Here in Bitcoin is a global protocol, but it has a token, and you're not going to use that token for everything, and it's the base of the wealth of the whole world. Because if there's a bug, which is absolutely normal, or there's an attack on the network, or something happens at the base layer, a mistake, which is very normal, and you can fix it very quickly when it happens. Then you can compromise a lot of all the systems up top. So what I notice now is that this vision which is absolutely rational in the sense that you can see it in other industries. Even the banking industry is layered and divided, and you have all the risk distributed between different components. And you have Visa and PayPal up here, and they use banks, and they don't use one bank for everything. They use many banks around the world for many things to distribute the capacity, the transaction capacity. And then all those banks, they use their own central banks as the core base layers. And that's how the blockchain industry is going to digamos, distribute that. Bueno, the 30 million developers in the world, because they see that it's all the blockchains are the same, and the only way to win is to kill the other, instead of understanding that this is distributed in terms of components and risks, and also layers and risks and security, scalability. Each component has its own. When they start to see this finally, which I think is going to be very soon, because it's becoming more clear, and I see that this year, for example, 150,000 people came to Etherplan to read it, and I see a lot of people speaking about this on YouTube. It's not that I invented it. This is all information that we started to understand in 2017 when there was the block size wars, and a lot of people in Bitcoin. I was a Bitcoiner and a small blocker. We understood that if you wanted for Bitcoin to scale, you have to keep the small block so it's more secure and start building on top, and that's how Lightning Network started, and Liquid started, and all the other systems, and RSK also was being called before for that purpose. So these are all systems on top of Bitcoin that provide programmability, scalability, etc. But going back to the developers, the 30 million developers in the world, when they start discovering these things, they are going to start seeing, oh, wait, Bitcoin is for this, Ethereum is for this other thing, Ethereum Classic is at the base layer, and it's the only one that is programmable, so I'm going to use it for these other things. So they're going to build their dApps, which are in the layer 4, and they're going to use the best parts and what is more convenient of each layer. No, they're going to use a rollup for certain things. They're going to use Ethereum too for other things. They're going to use Bitcoin maybe to store value, large settlements. They're going to use Ethereum Classic for the base layer smart contract, because in the future, apps are not going to be one smart contract in one blockchain. They're going to be a collection of programs, decentralized programs in different blockchains, where each one has a different role. And the programs that are going to be located and stored in ETC are going to be the ones that handle the most amount of money for large settlements, and where the rules, is very important for the rules to be highly secure and to manage digamos, higher values for payments. And that is going to power smart contracts in higher layers, etc. So this to answer the question, this is how I see today that ETC is today between 16, 18, 20, 22, 23 is going up and down, because sometimes Avalanche goes up and goes down. Sometimes, I don't know, Polygon goes up and goes down. So sometimes ETC is going to steadily go up, because it's the only one of the big, important and secure blockchains that it has a fixed monetary policy. So it's digital gold. It's programmable with smart contracts, so it's programmable digital gold. It's proof of work, so it has the most secure system that exists in the world. Now, proof of work is the only system that provides the guarantees of global consensus, fully replicated around the world. So it's the most secure system. Doesn't matter what the proof of stake guys say; they are lying, and the proof of work guys are saying the truth. And it has a fixed monetary policy, so it has sound money at the same time. Proof of stake systems, even if they write it in blog posts or they have it in their constitutions, or the foundation really promises it, or Vitalik promises it, or Charles, they are subjective systems. They depend on humans to just get together, especially large stakers and the people who manage their treasuries and their foundations, and they just get together and they say, we're going to change the monetary policy, and they just do it. And we have already seen that. The proof of that is that Ethereum has already changed the monetary policy at least 3 times. So, bueno, I lost my but the whole idea is that when this is discovered, then people are going to discover. So this is why I say that Ethereum Classic, within all this noise, the fact that it went up from number 70 to more or less 20, which is now 2022 18, means that it's being discovered. And I see that the 30 million developers are going to realize this and understand the position. And that position in particular is worth at least $5 trillion, between $5 and $6 trillion.
Man, that's so to kind of segue into this, and a lot of people have been asking about price predictions. Now, before Donald says anything, this is not, financial advice or anything like that. This is just strictly, his personal opinion. And so, can you kind of give them, because I know you have an end of year, you have a 5 year, you have a 10-year prediction. You actually kind of got all the way up to 10 years, but kind of give us the end of this year, a 5-year, and maybe a 10-year, if it's not asking too much. Where do you see Ethereum Classic in the future as far as price?
Yes, if you go to Etherplan, the top post is exactly that, is my predictions, and with further explanations of all these things. And it happens to be the most this year, 4-year and 8-year. So I'm going to tell you, respond for this year, in 4 years and 8 years. It's not 5 and 10 because up to now the blockchain industry has moved in waves, and these waves or cycles happen every 4 years, and we are currently in one cycle that started at the end of last year. Yes, this one, that post. I invite everybody to go and read it and to watch the video where I explain all these things verbally as well. So the logic of why ETC is going to be 33,000 in 2029 is because in the next 2 cycles, which the hypothetical 2 cycles that are going to happen in the next 4 and 8 years, Bitcoin, which is going to be the leader at the base layer of proof of work coins, is going to very likely first move to 50% of the value of gold. Today is 1 trillion out of 10, so it's 10%. It's going to go to 50% in 4 years, and it's going to go very likely, in my opinion, because of the size of the cycles and because of the monetary policy of central banks and all that. I think it's going to push Bitcoin to be 100% of the value of gold, and that's going to be in 2029, which is the in the next 2 cycles now, and that is going to be the same way that the gold standard is the standard for valuation, the future valuation of Bitcoin. Bitcoin, as we can see, is the gold standard within the crypto industry. If Bitcoin goes up, eventually all the rest are going to go up. So this is going to happen with Ethereum Classic, with Bitcoin. Bitcoin, the same way as Bitcoin is going to be 100% of gold, it's very likely that Ethereum Classic, which is this also proof of work coin, but on top of that is programmable, it's going to be the second biggest one in the world, because it's the only one that has these features, and because normally the second ones are roughly 50% of the first ones in these kinds of technologies. You can see my other reports about format wars and all that. Then I estimate that at least ETC is going to be 50% of Bitcoin. So that's going to be between $5 and $6 trillion. If you divide that by the supply in 8 years of ETC issues currently 3.2 ETC every 15 seconds. So the supply is growing, just like many blockchains, because of the rewards. But the reward goes down every 2.3 years. It goes down by 20%. So the estimated supply of ETC in 2029, if you get the value of $5 to $6 trillion divided by the supply, is around $33,000. So that's why I think it's going to be there in 2029. In 2024, it's going to be around $8,700, because I think just as Bitcoin is going to be 50% of gold at that time, because we are still in the S curve, ETC is going to be more or less 25% of Bitcoin, and that at the supply at that time, I project the supply as well, it's going to be 8,700. So the big question is, why do I still think that ETC is going to go to 1,000 before the end of December? Bueno, the macro reason is because central banks continue to print money all the time. No, the U.S. central bank is printing $120 billion every month, and the base money supply, which is, you can measure it you can Google the Federal Reserve's balance sheet. It was 4 trillion 24 months ago, and it's 8 trillion, more than $8 trillion now, because they're issuing money and buying bonds all the time to inject money into the economy. And M2 is $20 trillion. I mean, I don't know, it was like $4 or $5 trillion before. Now it's $20 trillion of money. So that is an external pressure that is making real estate, stocks, crypto, Bitcoin, Ethereum, Cardano, everything go up. Everybody has dollars, especially billionaires and hedge funds and banks and all that, because they are the ones getting all this money from the economy. And they have to do something. And eventually part of that goes into crypto, no? Just as it goes into bonds and stocks and real estate and other art. Because of that, I think that we are, and when you see the past cycles of 2013 and 2017 in Bitcoin, you see that we are only halfway in the cycle. And not only that, in this cycle, we have this wind in favor, which is the money printing and the government policies. No, the government just here in the United States, it just approved it's in the process of approving. It's in the final stages of approving $3.5 trillion in spending. So that's more money into the economy that eventually is going to be printed by the central bank, because the U.S. cannot pay this debt anymore. So with this wind in favor, ETC and the past cycles, I can see very clearly that Bitcoin is going to easily go to 125,000, which is my target for this year. And Ethereum is going to go to 10,000. And when that happens, and normally these two go first, and then ETC after a while. I'm trying to put my hands inside the camera. It catches up, no? And when you see the charts, go and check the charts of Bitcoin in 2013. You're going to see that the first part of the year it was like this, and in November it exploded. Yeah. Many times the price, no? And then when you see 2017, only Bitcoin, you just check like this, and you're going to see that at the end, boom, it exploded. So it's going to be like that. I am most confident about that. And when Bitcoin goes to 125,000 and Ethereum they're going to do more or less 3 or 4 times the current price. No, if Bitcoin is 46, it's more or less 3 times to 125,000. No, I don't know if the math is correct. Yeah, I think it's
roughly, give or take.
And Ethereum is 3,300, and to 10,000 or 11,000 is going to be 3 or 4 times as well. 3 times, I think, or more than 3 times. Bueno, ETC is going to do at least those 3 times, going just to stay on par with the current situation. But because we're going to be, by the end of the year, either Ethereum already migrated, because they say that it was going to be the last quarter of 2021. If they already migrated, if it didn't migrate, it's going to migrate in the first half of 2022. And everybody's going to see that Ethereum is going to disappear from the group of proof of work blockchains. And ETC is currently the 6th. No, you have Bitcoin, Ethereum, 1. And then you have Bitcoin Cash, Doge, Lightning, and ETC. Doge, Litecoin, and ETC. When people see that Ethereum goes away from that group, and they're going to see that the programmable one of all that group is ETC, I am sure that it's going to go up very fast and going to surpass Litecoin, Bitcoin Cash, and Doge, because those 3 coins are just more Bitcoin in the market. They don't have any feature. They don't have anything interesting. And ETC has the same monetary policy as Bitcoin, and is programmable. So that's the second driver. So ETC is not only going to go up 3 times also with Bitcoin and Ethereum, but it's going to go up another 3 times. 3 times 3 by 3 is 9. Another 3 times to go to be number 2, and I think that is going to reach 1,000. No, because if you divide 132 billion dollars, which is more or less the market cap that it should have to surpass the other 3, divided by the supply at the end of this year, it's around between $900 and $1,000. So I think that all that is going to happen, and I know that as time passes by, we are August. I mean, we only have September, October, November, December. Whoa, time is running out and everybody's panicking. No, don't panic, guys. Just go and see the charts. And between November and December, everything may happen. And not only that, I've been like, I was a stockbroker, like I said, a financial consultant at Morgan Stanley, at UBS Securities in the 90s. I lived this many times with many asset classes, when many stocks in emerging markets, and especially in these technologies that are emerging and being discovered. These short-term bouts that you see there, and you can see that now the past ones are smaller, but at the time they were as big as the current one, and it's very easy for ETC then to go from 60, which is 959, 60 to 1,000 in this context.
Well said, well said. And so I guess, I mean, with everything you've covered, I mean, some of the questions I was going to ask, you've already kind of answered it for us, Donald, with so much knowledge in the space. And so if there's anything that you would like the community to know about ETC or about cryptocurrency as a whole, or maybe they're just starting, because there's a lot of new investors coming into crypto, as we know, what would you tell them starting off for new investors, for any type of advice that you would give them?
I think it's, first, you said knowledge and everything I wrote on Etherplan, etc. First, I want to clarify that I am not a developer. I'm not an engineer. I'm not a computer scientist. I'm a business guy, entrepreneur. I work in the banking industry, etc. So I am more of a business and economics and markets person. But I did a lot of research to understand the underlying technology, like the internet before and the blockchain now. But for me, the key was to follow very intelligent people that are in the industry, and to understand the history of the industry. I give courses in my job at Bewares, that this firm, it's that data science firm. I am the blockchain guy within the firm, and I go to large global corporations, multinational corporations, and I give a course about the history, categorization, and use cases of blockchains. I go to large telecom companies, banks, etc., and they really don't know anything, and so they are understanding from scratch all these things. And the first thing is the history. You have to understand that in the 70s and 80s, the cypherpunks were guys that were persecuted by the government. The government wanted to shut them down. They were inventing these technologies. They invented public key cryptography. They're cryptologists, cryptographers, and they were libertarians. So they wanted cryptography to be used by anybody in the world. And they had this vision that they needed to create within the internet a private world with sound money and smart contracts, so they could interrelate with each other without the interference of governments and trusted third parties, because they saw everything that is happening now, surveillance society, what you see in Australia and New Zealand, how they are imposing laws and forcing people to be shut down, and they're following with cameras and artificial intelligence, and they can know where they are in the phone, so they send the police to get them and send them back to their homes. All this surveillance. So the internet provides a lot of freedom, because you and I talking like this, and this is freedom, but but at the same time, not so much, because this is also being surveilled. This video is being recorded somewhere, and the CIA, if we say something fishy, it's gonna pop up in their system. So we're not really totally free, but at the same time we're free. And they saw this, and what they really wanted was to create this cryptography protected world where you could have smart contracts and networks and do commerce and communicate between people and send money and receive money with sound money without depending on these larger organizations now, like the state, multinational corporations, etc. And then you have all the inventions of the 90s. Adam Back invented Hashcash, that is the core of proof of work. Then Nick Szabo, he said, wait, Hashcash is a lot of work and you produce a proof of that work. This is just like getting an ounce of gold. You have to spend $1,500 or $1,700 to get out from nature an ounce of gold. It is the same amount of work. And the gold is the proof. It's like the analogous of the cryptographic proof. So that means that we can create gold in the digital world. That was the key idea of turning Hashcash into something of value, because it's scarce, just like gold is scarce. And then Wei Dai invented the network, said, okay, one produces the gold but sends it to the rest of the network, and you can put a third party there to be like the arbiter of transactions between. So that was like a primitive sort of smart contract, but it didn't work. So they failed and they tried again. And then Hal Finney in 2004 tried, go and Google it, RPOW, RPOW, which was produce proof of work, produce digital gold, and send it by email. But he needed a central server to verify that the proof of work was true. So it didn't work either. And then in 2008, one of those cypherpunks, which is unlikely that he was not a cypherpunk, because when you read everything about Satoshi Nakamoto, he repeats everything that cypherpunks said, etc. Satoshi Nakamoto, with his pseudonym, he invented Bitcoin, but basically put all the previous systems in one place. And his brilliant insight was, and let's use the information of the proof of work as the consensus mechanism for all the computers in the world. Because proof of work, the work itself, the energy, the fact that miners invest currently $300,000 every 10 minutes just to produce a block, and produces bit gold, and the hash of the block is the bit gold, and then the network gives them bitcoins in exchange for that block. That is the monetary part. But that information that they spent $300,000 and they worked for 10 minutes is the information that all the nodes in the system, when they receive the block, assures them that is the correct block. Because if they receive another block that spent only a trivial amount of energy, they know that one is not the correct one. They know that the honest one has to be the one that was worked on. And that was the brilliant invention by Satoshi Nakamoto. And to learn all these things, so I recommend people to learn all these things, to understand this. And when you learn them, when you learn them, then everything becomes clear, because you understand, wait, proof of stake doesn't use proof of work. So what are they trying to sell me? They're trying to send me a rabbit telling me it's a cat. That's a Spanish. It's a Spanish saying in Argentina that they are trying to sell you a rabbit for a cat. And you start to see these things, and you start to understand, okay, but proof of work is not scalable, so we need something on top. So it's okay to do proof of stake, but let's not lie ourselves that proof of stake is the whole solution, because it's not the whole solution. And I wrote a post also, the great credit to Tim May. I mean, I became friends because he's the mentor of Nick Szabo. Nick Szabo is my partner, and he's my mentor. So for 3 years, we emailed all the time with Tim May and Nick Szabo, and Elaine O, who's brilliant, another computer science. She's brilliant. And all these things, debating all these things. As I was in that group, I was the one always bringing the naive opinions, asking the stupid question, and they would come to me saying, "Don't be such an idiot, Donald. No, you have to understand this, and that." So follow the writings of Nick Szabo, follow the writings of Tim May, follow the writings of Elaine O. These are very intelligent people who understand clearly, and they are cypherpunks, so they understand clearly what it is. And then I also read a lot of and spoke with, and the intelligence of Vitalik, of course, is something that we cannot deny, even though he's wrong politically on the political side in terms of what is secure, what is not secure, and he also minimizes the security of proof of work because he internally he thinks that scalability is the solution and not the security of proof of work. But even though I have those disagreement with him, it is undeniable that he invented smart contract, that he invented the mechanism. Smart contracts were invented by Sabo, but he invented the solution of how to implement them on a blockchain like a proof of work blockchain. And that invention is a huge invention. I mean, it's a second big invention after proof of work for me. So I read a lot of chatted and read a lot of Vitalik Buterin, and I filter out all his bad opinions. And I put it on Etherplan. So I would say a first way to start would be Etherplan, and from there follow the links to read all the others.
Awesome, awesome. So, kind of to summarize what you said, Donald. So, first things first for a new investor in cryptocurrencies, first to understand the history of the crypto
Yeah.
space, blockchain, why it's here, what problem it's solving, etc. And then from there, we want to understand the difference between proof of work mechanisms as well as proof of stake mechanisms. And so once we kind of understand those things, it kind of helps us to kind of pull back that curtain, to kind of understand what cryptos have a better chance of being here and what to maybe, I guess, limit our risk on what to invest in, because we know crypto is very risky, but I think education definitely helps limit that risk. And so with all that said, you hit it with so many gems, so much knowledge during this live stream, Donald. And I want to say thanks again. There's a lot of people that would like to connect with you, far as YouTube, far as your Twitter. I also posted the Etherplan link in the comments section as well. Where can people get in touch with you and find out more about Donald McIntyre and the content that you put out?
Bueno, I think that the public social channels for me are the best way. Many people send me direct messages telling me I bought X ETC at 4, and now I have hundreds of thousands. Thank you, Donald. But at the same time, others tell me, and I bought X, but 140. I'm losing money. What do I do? Please don't send me those DMs, because I'm not your personal financial advisor. Just like you said, this is not financial advice. This is my opinion. It's all public, and I'm very happy to interact with people on Twitter. I am at ETC33K, at ETC33K. And then on Telegram, I'm there every day. The Ethereum Classic Telegram, I think it's F_Classic on Telegram. And then Discord, you can go to the Ethereum Classic Discord. You can go to ethereumclassic.org, and at the footer of that website, you're going to see the links to the social channels. I'm in all those channels, and it includes the Discord. No, everybody talks on Discord. There's a lot of people there, and there's a market section and there's a general section, and I'm in those two. I talk about markets, and I talk about the general security and the differences between, and what is not a good change for ETC, like the treasury, and what is a good change like SHA-3 and stuff like that. All this happens in the Discord, in the general channel. So those are the places where they can find me.
Awesome. And I have his Twitter page up here for you, so definitely give him a follow. He also has a YouTube page as well, so definitely give him a follow. I mean, I've learned a lot from just his research, and I once again just want to say, thanks for coming on the channel. I know you're a busy man, and so if there's anything left that you would like to tell the community before we shut it down, you got the floor right now, Donald.
Thank you very much. No, I just want to thank you, Mike, for inviting me. You were the first YouTuber that I saw. ETC was a small community until it finally started to get discovered this year, and it exploded higher. We were, especially because of the attacks, the community had shrunk a lot last year in 2020. We were like around 10 guys on Discord and Twitter talking about ETC. And now in this year, I discovered that you that you were covering ETC. I discovered you first, and then Patient Money, and then Savage Profits, and then many others who are. There's another guy, a guy called Stonks guy. He has a small channel, but it's growing. He's also covering ETC and many and several others. And the thing that I value the most that you do, and the others as well, is that you do your research, that you read, that you understand the layered part because you did the research, and you have your critical thinking and you find it logical, no? And that you also clarify many things that had been fallacies about ETC. For example, since 2016, we were trying to always explain to the world that Ethereum is the fork and that Ethereum Classic is the mainnet that never got changed, that is immutable since the beginning, and it's going to be immutable to the future. Ethereum Classic is the original chain, and Ethereum is the fork. They are the ones who returned the money in 2016 from the DAO to the people. And that is a huge violation of blockchain and cypherpunk rules. So these things and many other things that you clarified and you have right are so important. And so I thank you and the rest of the community for spreading the right information about ETC.
Absolutely, absolutely. And well said. Thanks again for coming on. And we definitely have to do this again in the future.
Absolutely. Thank you very much.
All right. Thanks everyone for tuning in. And we'll see you guys on the next stream.
Bye-bye. Thank you.